Welcome to my channel. I am Ben, the business analyst expert.
In today's video, we're going to talk about the fastest way to qualify for up to $300,000 loan. But before we start, don't forget to like this video and click on the notification bell to be notified of future videos. If you're looking for a loan to start a business, to buy a business, to expand a business, or a loan for personal use such as to go on vacation or for the wedding, you should watch this video until the end. The term loan is the option that you should consider. What is term loan? Term loan means a specified amount of money given for a fixed period of time, usually between 1 to 10 years, and to be paid back with interest agreed. It is a financial product designed to give either as a personal financial assistance to public or given to a business organization for a fixed period of time. It builds a relationship between bank and borrower to a specified period of time in which both parties should bound their terms and conditions stated in the agreement. What are the features of a term loan? Typically, it features on floating interest rate for a specified amount of money, matures normally in between 1 to 10 years, and requires a specified repayment schedule. Loan featured beyond 1 year, normally repaid from the future cash flow of the borrower. Lender must actively monitor how borrower comply utilization of loan amount and repayment schedule in order. Purpose of term loan: purchase of furniture, fixtures, vehicles, plant, office equipment, or personal use. Maturity generally runs more than 1 year and less than 5 years, but may go longer depending on amount and repayment schedule. Classification or types of term loan. There are 3 main classifications found in term loans: short-term loan, intermediate term loan, and long-term term loan. Classification focusing its length of time for which money is lent. Hire purchasing of home appliances, car loan, home loan, business loan, agriculture loan, loan for professionals, etc. are the few examples for term loan. A short-term loan is a single-purpose loan, matures within 1 year mainly to cover unexpected cash shortages. It helps to either protect a loss, hence boost the cash flow, or to make some good profit from the utilization deal. In some occasions, it works as working capital in the production industry for inventory purchase. An intermediate term loan is a planned requirement with repayment period of 1 to 5 years, becomes intermediate term loan. Repayment can be either from profit generated from the loan amount or from different sources. Purchasing a car may not bring direct profit but boost facility of business. A long-term term loan uses the same concepts as mortgage loans investing real estate because of the same sort of assets. The loan amount may or may not generate profit, and repayment period will be over 5 years. Banks have less risk, secure loan disbursement due to its mortgage collateral. Special commitment term loan. It gives a short period single-use loan having less than 1 year repayment scheme. It's considered to be an interim finance support from bank side to purchase or protect or recover from an immediate crisis or needs. This loan purely depends on the relationship between customer and banks and may not be available for every aspect. Just about anyone can qualify for the term loan as long as you are a U.S. citizen and you have a good credit score. The only 2 requirements for the term loan is to have 680 plus credit score and a proof of income to make sure that you can repay back the loan. The application process is pretty simple. You only need to fill out a 3-minute form. I placed the link of the application form below this video. Now let's talk about some of the stuff you need to take in consideration when getting a loan. Getting a small business loan can be a smart way to grow your company if you have time and money to spare. However, it's important to understand exactly what you're agreeing to before signing any documents. A loan is money you borrow and pay back with interest. If you decide to take out a loan, make sure you understand what you're agreeing to. A loan is money you borrow and pay back with interest. If you decide to take out a loan, make sure you understand what you're agreeing to. A lender will give you cash in the form of a check or electronic fund transfer. Or they can write a promise on paper stating that they will provide the cash later. You agree to repay this amount plus some extra money from your own income, either as fixed monthly payments, over time, or all at once. It's called an installment loan. Here are some things to consider before taking out any kind of debt. You might choose to take out a loan to use as working capital, basically money to help with the day-to-day cost of your business. If you're running a business, it's important to have money available for the day-to-day cost of doing business. This is a big part of what working capital is. Working capital can cover a number of different expenses: payroll for employees, paying for office space and supplies, covering marketing costs such as printing flyers or buying ad placements on local radio stations or websites. You might need to take out a loan in order to pay off those bills because they can add up quickly if you don't have the capital available right away. For example, let's say that your average monthly expenses comes out to $5,000 per month, $60,000 per year. If you don't have any other sources of income, such as from customers paying their invoices, then it'll take about 70 months or 5 years before you've paid off all those bills without taking out any additional loans. Different types of loans can be used for different things. For example, if you want to buy a piece of equipment for your business, you'll likely want a term loan. Different types of loans can be used for different things. For example, if you want to buy a piece of equipment for your business, you'll likely want a term loan. You may also use term loans to pay for business expenses or marketing expenses. If you need to use the money in the near future but plan on paying it back over time, often with interest, then this type of loan is probably best for you. It's extremely important to understand the term of any lending agreement before signing on the dotted line. Know exactly how much money you're borrowing, the interest rate that will be applied to it, when it needs to be paid in full, and how much you'll need to pay over time. It's extremely important to understand the terms of any lending agreement before signing on the dotted line. Know exactly how much money you're borrowing, the interest rate that will be applied to it, when it needs to be paid in full, and how much you'll need to pay over time. Shop around for different lenders. You may have heard horror stories about payday loans from friends or family members. But this doesn't mean they're all bad. Just because one person had an experience with a lender doesn't mean everyone else has as well. Get multiple quotes from several different lenders before making your decision so that you know exactly what each company is offering and which option is right for your needs. It may be smart for your business to get a loan as long as you pay attention to the details. When you decided to get a loan, it's important to make sure that you can actually afford the payments. A lot of businesses assume that they'll be able to pay back their loans easily and on time, but this is not always true. A good way for a business owner to find out if they are eligible for a loan is by talking with one of the bankers at their local bank or credit union. It's also an excellent opportunity for them to ask questions about how much money they need and when exactly they would be able to pay it back in full. In conclusion, if you're considering getting a loan for your business, it's important to understand the terms of the agreement and what it means for your bottom line. Make sure you have enough revenue coming in to pay back the money you borrow, and be sure that whatever type of loan you take out makes sense for your company. So guys, this concludes our video on the fastest to qualify for up to $300,000 loan. And if you're looking to apply for the term loan, click the link below this video to apply. Thanks for watching. Give us a thumbs up and see you next video. Until then, keep smiling.
Please subscribe to my channel if you have not done it yet, and don't forget to click the notification button. I hope you guys learned and enjoyed this video. Thank you, and have a great day.